What's up, guys? Today's video is special. I'm going over how to build a Bridge P&L. I'm looking at business owners' tax returns, extracting the value, and showing how I come up with the real cash flow. You gotta watch the whole thing. Stay tuned.
So today's webinar, we are going to be going over how to build a Bridge P&L. In the business world, in the small business world, 99% of business owners run their businesses like piggy banks. They put their personal expenses through the business. They put their health insurance, they put their kids' cars, they put their wife's salary, whatever it is to beef up the expenses as much as possible. So at the end of the day, their income isn't showing what they actually make. It's showing a loss or maybe a minor gain. So the end result is so they don't have to pay taxes on that, because these small business owners don't want to pay taxes because they try to put everything in their pocket. Do I blame them? No. Do I think it's easier if they actually pay the taxes and do it the right way? It's easier and you can sell it for much more, especially if you're looking to scale. But this is the reality of the situation. So, my job as a buyer, and also our job, who's ever brokering or buying, your job as a buyer or broker, you have to learn how to look at these financials, understand what's real, what's not real, understand what to ask the seller, and how to get to that real number. So in this exercise that I'm going over today, I'm going to show you how to read a real tax return that I've never read before. I just got it sent to me now, and I'm going to show you how to actually build a Bridge P&L. Okay, so we're going to get started. So how to turn a seller's messy tax return into the number that actually sets the price. The P&L says the business makes money. That's not what it really earns. That's true. The P&L is not going to show exactly what the business makes. Stop reading the tax return at face value. So a lot of the times when you're dealing with someone that wants to buy a business, you send them the tax return. They're like, well, the tax return shows that the business lost negative, $22,000. And then I walk them through this exercise, which I'm going to show you. And then, that separates a good business broker from a great business broker. A great business broker will get down to the nitty gritty. We'll go over the tax return. Well, I'm not a CPA. I'm not an accountant. Don't rely on me. But here's what your CPA will say. Here's how you come up to $200,000 net. All right. So the Bridge P&L, reported SDE. So SDE, seller discretionary earnings. That's what the seller makes plus their net income. So whatever the salary the seller makes plus their net income, that's the SDE, the seller discretionary earnings. The EBITDA is earnings before interest, taxes, depreciation, and amortization. Now, there are a couple of methods to evaluate businesses. One method is evaluating on EBITDA. One method is evaluating on SDE. It really depends on the type of business. So the whole bridge on one slide: reported, add backs, SDE, EBITDA, valuation. All right, so I'm going to jump into a random tax return that I just got right now. I need to try to block out this as much as possible. All right, so this is a tax return. So what I do is when I read a tax return, I pull up a spreadsheet right next to it. So I already pulled up, I started working on the spreadsheet right next to it. This is what I do. Every time I get a tax return, I build right next to it the same exact tax return, but in a spreadsheet. So it's pretty much the same. So gross sales, 1.559, cost of goods, 394,000. So cost of goods in a business is not always accurate on the tax returns. According to this seller, he spends $1,200 a month on his groceries through his business. So that is equivalent to roughly $15,000 a year, roughly. That is nothing to do with his business. He goes to ShopRite and he buys his groceries through the business. So he added the $15,000 into his cost of goods. Right? So in the tax returns, the cost of goods here is $397. Out of that $397, $15,000 was personal. So that's going to be labeled. Column C is where I'm labeling the potential add backs. All right, so that's cost of goods. Every business is different. This is a wholesale bakery, so he gets away with going shopping at the market. Not really, but that's what he does. Advertising and promotion, $7,247. I went over this with him. That's 100% an ad back. He uses that for another business through Facebook ads. He can prove it. So that has nothing to do with the business. So that's a full ad back. Auto and truck expenses. Out of the $26,578, he told me 20.25, which is 2171, is his own personal truck, which is not that much, which is 2171 a year. Depreciation, that's a full add back. So it's 88 G's right there, which is going to be added back. Dues and subscriptions. So what we do, guys, is we go line by line on the tax return. And then when you're looking at the tax return, you go to page, I believe it's page 16 here, and you go, these are all his other deductions. So this is where I'm getting dues and subscriptions. I'm getting, the truck expense. It's labeled on the tax return. It shows up on page 1, the page that I showed you, but it's labeled over here as line 20, which we'll get to. So everything that's here is in the tax return, in case you have questions. So the 100% is the advertising. The truck is about 2171. Depreciation 88. Dues and subscriptions 80. Gifts, 100% of the gifts are gifts that he pays his, whatever it is, personal, $2,000. Automobile 112. That's $2,000 right there for his other truck. Personal. Janitorial, $1,500 for whatever he marked there as a personal ad back, which I make him prove it. I don't just take his word. I make him eventually, he has to prove this. This is not just, oh, he says, she says. No, we need to see receipts. We need to see actual bills. Because when it comes down to due diligence, every buyer is gonna do a quality of earnings or get to the nitty gritty and see this. Legal and professional fees, $38,700. He put $36,000 as an add back. And what did he say? He said 3 kids on board of directors get $1,000 a month. So $36,000 out of the $38,700, which legal fees in a business line item is not a lot, so that seems accurate. Landscaping $58.62. For a bread route, there's no landscaping, so that's why he put landscaping expense there. Meals and entertainment. So every single business, this is what you have to do. If you don't do your homework up front, you're going to get clobbered. You're not going to be able to sell the business because you're not doing any of your diligence up front. All right, so let me run through the spreadsheet first. All right, so I'm going through the tax return. I'm going through the spreadsheet. I'm going over all the add backs, janitorial, landscaping, legal professional, miscellaneous. There's nothing there. Okay, this is a big one. 140,000 employee wages. That is the owner's salary. Now you can add this back for the SDE, right? But it's not 100% an add back. So the owner works there 20 hours a week. What is it worth? What is 20 hours a week worth here? To run a wholesale bakery that's doing $30,000 a week, what is it worth? An average salary for this type of business is worth $80,000 to $90,000 a year. I can get a really good manager in North Carolina for $80,000 to $90,000 a year at $20 an hour. Let's say it's $50,000 a year. Right? So there's a $90,000 add back, not 140. So I just have to tell, I don't know if Elliot's on the line here. That has to be changed. So that will be changed. Health insurance, $32,648. That's 100% an add back. There's no health insurance that a small wholesale bakery pays. So that's getting added back. Pest control, $1,235. So all these building repairs. So what you do is you ask the owner, you go line by line. On the tax return as well, you go line by line. This is the tax return right here. Line by line on other deductions. Add everything back. So what we did is we added everything back. Add backs came to $361,000 a year, plus there was a piano that was paid for, which was $8,500. That's $370,000 a year in add backs. Now what you do is you take this number and you add it back to the net income on the tax return. So the net income on the tax return is $61,166. You add that back, and over here you're roughly at 370 plus 61 is $430,000. On the tax return, it only shows 61,166. Do you guys see the discrepancy here? When you multiply this by 4 times, 61 times 4, at first glance, you're like, there's no way this business is worth $240,000. But when you
Multiply $430,000 by 4, you're looking at over $1.6 million for the business. Now it makes a lot of sense. That's why he's telling you he makes $400,000 a year now. So when you get deals, can't just look at it at face value. You've got to go through everything. You got to go through all the expenses, and you got to speak to the owner. And the way that I do it is I like to get the owner on a live Zoom and do what I'm doing here with, like what I'm doing with you, what I do with the owner. And we go line by line by line by line. Now it does take more time, but that's the difference between a good business broker, good buyer, and a great buyer. So with that being said, let me open up the floor to some questions. I got something really neat to show you as well after this. Is there a cheat sheet with the common airbacks, like how I would? Yes. So I'm going to show you, Christina. We're building at Hedgestone a P&L builder, bridge builder, which I'm going to show you guys after this, which is Hedgestone, and it's in the portal as well. So I will be showing you after this. And there is a cheat sheet for every single industry, what to look for. And it just, every day it's going to be built upon. But we did spend significant time building this out. Michael, you mentioned that you make the seller approve the numbers. Are you creating a data room and sharing this with the buyer QOV provider? Yes. Great question. Really good question. What I do is on every deal, we have a data room. So we'll have the tax returns, we'll have the P&Ls, we'll have even an add back. Like I'll show you this data room that we're building for this particular business with Elliot. We'll show you this data room. Second, I'm just showing logging in. It's really important to build a data room for every deal. So let me share my screen. So check this out. So this is a preliminary data room that we're building. We have a due diligence folder here, which has general ledgers. We have to clean it up a little more. Employee birthday, job title, pay rates. So we know everyone's birthday. Like as much data as possible. It doesn't hurt. The more data you have, the more you fill up the data room with. Owner personal add backs. So these are all the receipts that I told you about. Advertising and promotion. So we go on the QuickBooks. We go right on there. Boom. We look up exactly what it's for. So there's no guessing game here. Then the financials, right? Then we have, every year, 25. We have those P&Ls. We have financials, add back reports right here. So like what I told you before, to prove it out, I have it here. Supplies expense. Everything's on the transaction report in QuickBooks. We know exactly what's going on here. So right there is proof in the pudding. And now when we speak to buyers with our AI and with everything, we can really get really granular with everything. So that was a great question. I see add backs that are almost equal to the SDE. Is that a red flag? Is there something we can do prior to paying for a Q or V? Yes, so this is what you should be doing prior to paying for a Q or V. All this simple work that a broker should be doing. Now, if it's a large transaction, no matter what, you want to do quality of earnings because, can't trust anything. So, the add backs here, there was a big depreciation add back that was $88,000. The salary add back was a big add back, but there were also other add backs like legal fees and, a couple other add backs like that actually matter to the bottom line. But you definitely want to do this before you do quality of earnings. Who pays for the quality of earnings? The buyer usually pays for the quality of earnings. Typical quality of earnings, depending on the deal size, like I'm doing a $40 million acquisition right now, that's going to be a $20,000 quality of earnings that I'm paying. I just did a $9 million deal. That was a $10,000 fee for us. So it's worth it though. It's worth every penny when you're buying these types of businesses. A multiple of 4 seems high. Actually, for a wholesale bakery, it's not. We're closing on one next week at a 5x. Now, wholesale bakeries they're amazing businesses. If you run them correctly, you can make 25 to 30% profit. There's no sales tax. You don't collect sales tax, which is a huge line item. In North Carolina, it's different than New York. I don't remember the sales tax in North Carolina, but it's a big line item. And also it's profitable. Is the quality of cost observed by the owner? Everything's negotiable, Bob. Everything is negotiable. It's a great question. If I'm buying it, I'm going to try to put that on the owner. If you're buying it, you should try to put that on the owner. You should try to split that cost. Usually the buyer pays for it, but that's how I would do it. How does distributions work with SBA? Add back or no? It depends. If you're not working with the business, if you're not working at the business and you're taking a distribution, the SBA will look at that as an add back. The SBA will take that bottom line number and will add that back. I've seen it a million times. That's a phenomenal question. If you're working at the business, you have to account for some type of salary. The add backs are nice, but doesn't mean the deal will be bankable if the return is only a small percent of true net. Most likely they will have to be selling. Exactly. It's very hard to, these businesses, like this business right here, this is actually a bankable business. Believe it or not, this is a business that we got a pre-qual business. This is a pre-qual business with 10% down at $1.5 million. And that 10% is going to stretch to 20% because everyone tells you 10% and it's not really not. But this is considered a clean business. This is very clean. I got a perfect example for you. So this one will qualify for SBA, but 90% of them don't. And seller financing is the option. Also, who is tougher on the add backs, the buyer or the SBA? Great question. It depends. Every buyer is different. If you have an uneducated buyer that trusts you, that knows you've been through the process, and you really can show him the proof, then he's gonna be less tough. SBA, they're tough. They look at what's on the tax returns. They add back depreciation, amortization, salary, interest. They add everything back, but they also look at it at face value as well. And they're only going to loan on what, they're only going to put debt on what the loan can serve. They only can service the loan. They're not going to, there's no cash that can be added back. Everything is straight from the tax return for the SBA. So yes, I think the SBA is tougher. To use AI to look at the P&L statements. So I have an AI system that we're building that I'm going to show you guys in about 5 minutes. That's going to solve this whole entire issue. That's on my portal. So I will show you guys how cool this is, what I've been building, because this is a need for my business. So yes, the answer is yes. Oh yes, we have Charles Park on here. Charles Park is he is our preferred SBA lender. If you guys have questions, Charles, do you want to put your number in the chat? If anyone needs a loan, go to Charles. He's done a supermarket with me. We closed. No one else was able to do it. It was a $5 million deal. The financials were messy. It was a 1 year deal that I only owned it for 1 year. And Charles was able to just somehow make it happen. Can you expand on why owner salary may or may not be a full add back? Sarah, can you unmute Charles? I think it would be great if he can go over that real quick with me.
Absolutely. Just 1 second.
Charles, you there?
Can you hear me?
Yes, how are you?
Hey, Mike, how's it going?
Sorry to put you on the spot.
No worries. You sent me a link to join, so I'm in the office. But I'm sorry. What was the question? I didn't hear.
So the question is, why do banks? You work for a SBA, a bank that does SBA. Why do they look at the seller's discretionary earnings or salary as a potential add back?
Well, I think I tell most of your prospects that depends on the situation. Sometimes you could add back the salary expenses if the potential buyer has a job. You know what I mean? Like if they have a job and they're going to continue to have a personal income coming in, that we could add back 100% of the salary, owner salary. Now, if he doesn't have any personal income, then we have to consider 50% of the owner salary to, obviously you have to pay for the personal living expenses and so on. So it all depends. I cannot add back all 100% of it if the buyer needs the owner salary to live off, then, So again, it's just case by case. I hope that makes sense.
Say someone's work. No, it does, definitely. So say if someone owns a supermarket and they have a full-time corporate job, but they own the supermarket, but they pay themselves $100,000 a year through the supermarket. Is that going to be added back?
Yes. So what you're saying is he has another corporate job, right?
Yeah, he has a corporate job. He owns a supermarket as a side business. He pays himself $100,000.
100% I could add that back. Owner salary, 100% of it. Yes.
What are some unique add backs that people pass through their business that we can add back? I'm just trying to think of some examples.
So some of the expenses that, as long as we have some documentation to prove that, meaning, I know sellers say, oh yeah, I spend these money on health insurance, automobile bills or whatnot. But then if we have the documents As long as we had the documents to prove that this is not going to be recurring expenses for the buyer, then we could add those back. So again, it could be anything. As long as it's
So like
not
legal,
recurring expenses, yes.
as
Yes,
long as they're
Michael.
not recurring.
Yes,
Legal
correct.
fees, say someone fell $50,000 on legal fees, and they show you that was for another case that had nothing to do with the business, that can be an add back.
Exactly. Sometimes, for instance, I looked at a deal about a week ago. The potential seller was working to get franchise his business, and then it worked out that he was not able to do that. So he spent literally $150,000 in 25 and 24, and 23 and 22 tax returns. He was not showing those expenses. So I was able to add those back as non-recurring expense for the buyer. So it all depends, case by case.
Absolutely. A couple other questions, and then I want to show you guys this. And Charles, I want to show this to you too. This is a Bridge P&L builder where we can basically upload documents here. You can click on your deals and you can go through every single deal, and it will give you the multiple per industry. It will say, the interest is high. It gives you all these different variables, which is really cool. You can put everything in here. It processes it. You see that. And then it builds you your Bridge P&L, and you can see the actual live link that you can share with your seller and your buyer. So this is all being worked on right now, which I think is going to help the banking industry as well.
Absolutely. Wow. This is unbelievable. Wow.
Yeah, this is all through our AI team. Someone asked, do you have to look also at the processes or SOPs or structure that the business has, or does it really matter? It matters most what the taxes have. Jose, when the banks, and Charles knows better than me, the banks will look at what the tax returns have. That's the number one most important thing. They'll look at what the actual tax returns show, what they can prove as add backs, and that's how they'll loan the money. One time we did a deal, and I believe Charles was part of this deal, where the tax returns and the POS reports were totally different. And we were able to prove the real income through the POS reports, and we were able to make a case to the SBA that this was the real income. Charles, is that normal? I know we did that, I believe, was that with you? Where it was a car wash and the numbers on the POS were different from the tax returns, but the SBA went with the POS numbers?
I don't think that was me. I'm not quite. No, it wasn't.
No.
Well, I've done it that way too. Depends on the deal again. If you remember that supermarket deal, remember the seller did not have a full year of tax returns, so we were able to do it with the quarterly the taxes as well as the draft, and then we got the commitment, and then we filed the seller's 2024 numbers. So. Again, we could do that as well. Case by case.
That's a great tip. That's a great tip and trick for everybody here. If a seller hasn't filed his 26, 25 tax returns and he's looking to sell his business, we can basically guide him, and we can speak to a CPA on the best strategies to get the most amount of money before filing.
Exactly. That's that way that seller does not have to. It's not committed to paying all that taxes. So I tell this to a lot of your business brokers. Thanks to you, Michael, I speak with a lot of your business brokers from Hedgestone. And I tell them, listen, speak to your sellers. If they didn't file the 2025 tax returns yet, then why don't you ask your CPA to prepare the draft tax returns? And then I could actually get you the numbers, and then you get the draft numbers. And with that, I could get the commitment letter, and then your seller could file the tax returns after the commitment letter. So that way, he's not committed to paying all that taxes until you have the actual buyer committed to SBA loan.
That's huge. So then you have much higher chance of the deal done.
Exactly.
And this information, guys, is invaluable. Having Charles here, I didn't even know he was coming. We've done probably 40, 50 deals together. And it's just, when you have this contact, he can get anything done, if it makes sense. So definitely reach out to him himself. His number is the 201 number in the chat if you're looking to buy a business or sell. Now, one other thing before I let you go, Charles. When we get a listing, the best thing to do is to send you the numbers first, or send it to any SBA lender to see if it could get pre-qualified, like this bread route. Did Elliot send this bread route to you?
I looked at this deal, and I believe we were almost literally, I think we had a prospect, and then I got him the LOI, and then bank was almost giving a, commit. We were about to approve it, and then I think he kind of like backed out. But this one, I had a lending partner that, we were going to do this. A commitment letter was going to be given to the buyer literally like within a week or so, and then he just backed out. So this is 100% doable, 10% down. A lot of banks going to be this deal is really strong. I was like, anybody could qualify for this. 10% down.
That's great. You know what? I'm gonna advertise it like that. 10% pre-qualified.
This is the one in the North Carolina, right? I didn't look at the tax return yet.
Yes.
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 This is yep.
Some people are asking on the chat, is it better to buy a deal as an asset purchase agreement, or is it better to buy a business as a stock sale? What do you think?
Well, that depends too. If I think most of the transaction is better to do an asset purchase, but if whatever the business that is, if you have the contract with the third party vendors, contracts, that is equity purchase is better, because if you form another entity to purchase the asset purchase, then you would have to form another, contract with these companies that you're doing business with. You know what I'm saying, Michael? I hope that makes sense.
Yes.
So
yes.
So it
I would
depends on
say
what type
most
of
of our
business.
deals are asset purchase agreements.
Most of the transactions I do is the asset purchase, but again, if the selling business has a lot of contracts with the like part, for instance,
all the contracts, it's easier to assume that.
Exactly, with the stock purchase with that, so
yeah. The only thing is the liability. It might pop up. Yeah,
that's the downside with the equity purchase. But like for instance, a towing company, they have a lot of times these towing companies got, the city parking, they have a contract with the city of, whatever, Trenton, Philly, or New York, and their contracts are under with the existing entities. Now, if you're purchasing asset purchase, then obviously you have to get a new contract with the city, so it gets more. It's much difficult that way. So that's why you're doing the equity purchase in that particular situation. So.
Okay, great. Thank you very much. I really appreciate the wealth of knowledge.
All right. Thank you, Mike. All right.
Thank you. So I see a couple other questions. Yes, you can definitely get a referral fee from the SBA lender. Charles does offer that, so and other lenders do as well. It's definitely not frowned upon. You're interested, Tyler, in the wholesale bakery. I'll get your number. I have your email. If you want to privately send me your number here, I'll have Elliot call you and send you everything. It's a great deal. So real quick, I'm going to this Bridge P&L. So we're building this right now. It's in beta phase. So as we do more of these webinars, I'm going to show you more tools like this. So basically you log in, you have your dashboard, you have all your businesses here. You can click on one of your businesses. Let's just open this one. You see the P&L here. You download the P&L in here. It comes up, owner salary. You could pop it in what the actual add back is right here. Pops in. You have your total operating expenses these are the add backs that get added back. Plus this, you're at $985,000 as an SDE. We're gonna have, valuations on here. The bridge and data room export. So now we can export these Excels into an Excel, into a PDF. You can also share this as a link to the seller as well. You can check the documentation checklist. You can check if it's the owner's comp market study, lease comps for rent. So we're adding more information here. And then, buyer share view. So you can see, buyers can see exactly what's going on here. So this is all how we calculated everything, which is great. And yeah, we're working this is not the CRM, this is just an AI tool that I'm building, but it's gonna be in my portal. All my advisors are gonna get this, yes. They also get access. So who's ever a Hedgestone advisor, I have the Hedgestone portal. I don't know if you're all on it. I'll log myself in and show you guys this. This is really cool. So whether you're a buyer, whether you're a broker, does everyone have access to this? If you do, let me know if you don't have access to this. Okay, James, you don't have access. Anyone that's in Hedgestone, if you don't have access to in this, then you have to get it. I'm going to send it to you.
Actually, go ahead and email me, Sarah, if you don't have access to it, and I can get you set up if you're in Hedgestone.
I want to show you guys this. This is really cool. I've been building this every single day with the team, and it's just another learning tool for everyone to really learn. So, all right, so over here, If you want to be, for the brokers, Hedgestone Academy. I have my new, this is the best way to get leads here. I have videos here, how to buy car washes, live deals, AI for business brokers. So all cool videos here. I have more live sessions here. Every week I'm building on this. Industry multiples. So whatever industry you are, I have the multiples in here. SDE, EBITDA, add back normalizer. So all these cool deal scenario walkers, right? And then industry deep dives. I also have podcasts on every single industry and how to evaluate it. So the broker tool is really cool. Then we have the buyer tool as well. So if you want to buy a business, I have the same thing of industry multiples. I have, a restaurant, food service P&L quick check, red flag finder, 14 podcast lessons here, Friday deals with Mike. So I go live Fridays, I put it in here. This is very, and Dawn, great point. I have a YouTube video that goes through how to use this. And then on the seller side too, if you want to sell your business, I help you exit prep for your business. So this is every single day I'm pushing this. If you're not part of Hedgestone, there is a charge. It's $197 a month to get access to this. It's portal.hedgestone.com. If you are part of Hedgestone, you get access to this for free, and we'll give you an account and everything. If you guys want to join Hedgestone, reach out to me. You can reach out to me directly. You can go on this link here. Do you mind putting the link in the chat, Sarah, if they want to join? If
Yes.
I am currently brokering deals, can I bring them to you for buyers? We really don't, and this is no disrespect at all. It's just because of it's our control. We love to control the deals, Chris. So we really don't co-broker with people. If you have listings, absolutely, right? Well, we'll love to work with you. But there's so many brokers in Hedgestone. The rule is we don't really co-broke because we want to have control of the buyer. We've had situations where we brought another buyer that's not part of the company in, and then it made us look bad. So the policy is only if you have sellers we can co-broke with you. Any other questions? Yes, it includes phone scripts. Next week, guys, on Monday, I'm happy that you're all here. At 5 o'clock, I'm doing a live call webinar. So I'm going to be calling random businesses live, getting the listings, showing you how I do it, calling buyers live, calling sellers live. It's going to be epic. All right. So I want you guys to be here next Monday. Do not miss it. I'll be posting it on social, the link. If you want to join next Monday, just sign up to this link right here that I'm posting in the chat, brokers.hedgestone.com. You just put your information in, and I will send you over the Zoom link for next Monday, live cold calling. And yes, that includes phone scripts, L. So I appreciate it. It was 45 minutes. I hope you guys learned something today. Every single week I'm doing this every Monday. And if you want to join Hedgestone and you want to make money, now's the time to get in. Chris, understood I have a couple of listings. I'll have to figure out a way to find some synergy and possibly lead to me at Hedgestone if that's where. You definitely should join Hedgestone. I would love to have you if you have listings. I promise you we'll add so much value to you. You should reach out to Vince and Dino or myself. Let's definitely make money together. And thank you, everyone. I hope you guys enjoyed that video. I hope it was a value-packed lesson. Next Monday, I'm going over live calls. I'm calling business owners live on selling their businesses. Stay tuned. Please hit the subscribe button below, and I'll see you next week.